Over the last 24 hours, nearly $100 billion has been wiped off the cryptocurrency market cap, and we're seeing Bitcoin reach 2-month lows. There's a lot of negative news, and in today's video, I want to go over the negative news, but also touch upon things going on with whale accounts, which are a bit unusual, and I haven't seen anyone talk about, which actually is a very bullish sign if you're a long-term investor. So starting off with the overall crypto market, what we've seen with negative news is that right now we've seen over $335 million liquidated in the last 24 hours for the crypto market. This has triggered this massive crash we have seen from Bitcoin going at $22,000 per coin down to below $20,000 per coin for the first time in over 2 months. So this has caused this massive sell-off, mass liquidations, just pushing the price lower and lower. What we've seen in terms of news and catalysts, which have really been bad for the crypto market, is first going to be with what has been going on with inflation data in the U.S. Recently, there's been a couple of new reports come out for unemployment, for labor data, and just Jerome Powell talking about the current state of the market. And in these different meetings and reports, it ultimately looks like Jerome Powell and the Federal Reserve are going to be raising interest rates at a faster rate than they initially anticipated. And in their upcoming meeting, they're going to raise interest rates at a much faster rate than they had previously expected. So that is the first catalyst. But when we're looking at crypto-specific news, because that with the Federal Reserve affects everything, all markets, we're looking at crypto-specific news. I want to quickly interrupt today's video to bring you a word from our channel partner, Swisscheese. Swisscheese, symbol SWCT, is built on the Polygon blockchain and is developing a set of products and services designed to simplify the way that you trade stocks, shares, and bonds. It allows you to do this in any global currency you wish, and you don't have to interact with any other underlying technology. You could do it directly through the platform. The cool thing about Swisscheese is that it is a DEX where you just can buy tokenized stocks, and all financial instruments like stocks, futures, bonds, and commodities are tokenized, so users don't have to rely on centralized institutions to trade them, which is a huge problem that we see right now. In addition to this, you can swap crypto for any shares, any stocks on its platform in a matter of seconds, and they also offer beginners an easy way to generate high returns during volatile market conditions, which we have been seeing as of recently with their special curated mixed portfolios. Swisscheese's ICO presale is live until March 18th, 2023, where users can buy SWCT tokens at a discounted price. Right now, one SWCT token equals 0.22 Matic. You could see this directly on their website, where you go to their website, you click on buy now, and you can easily partake in their presale, and it will go up as time goes on. So right now it's at 0.22 Matic for one SWCT, but in the future it's going to go up to 0.33 in their upcoming crowd sale. So if you're bullish on tokenized stocks, crypto, and just stock to crypto swapping in general, well, definitely worth checking out Swisscheese. Use the link in the description and let me know your thoughts. Anyways, let's get back to the program. We can see that Joe Biden recently came out, and there was a Biden budget which proposes a 30% tax on crypto mining electricity usage. Ultimately, the way this works is that United States crypto miners could eventually be subject to a 30% tax on electricity costs under a budget proposal by Joe Biden, which aimed to reduce mining activity. And ultimately, in this proposal, it doesn't matter if you're using clean energy or what the energy source is. Ultimately, 30% of the cost of electricity used for digital asset mining are going to be required for taxes. And this isn't guaranteed. This hasn't passed yet, but in the future, we're going to see if this passes. And if it does, it would have negative impacts on the crypto market, because it was not only drive a lot of crypto market miners out of the United States, but it would be bad for just competition as well for crypto mining in the US. Cause a lot of fear that regulators could be cracking down even further on crypto. Like, is it going to start with crypto mining, then go into, different tokens? What's going to happen there if they're already starting to crack down on crypto mining? Next thing is going to be with Silvergate. Silvergate Bank recently said that they're going to be voluntarily liquidating all of the positions, closing down, winding down their operations, and liquidating the bank entirely. So in a March 8th announcement, Silvergate Capital Corporation said the decision to shut down operations was in light of recent industry and regulatory developments. According to the company, they said that Silvergate Bank liquidation plan included full repayment of all deposits, and we saw that many firms like Coinbase, Gemini, Galaxy Digital, many firms had close ties with Silvergate. And as a result of this, people are wondering, is there going to be long-term negative impacts on the crypto market because of Silvergate shutting down? Like we saw with FTX. The initial impact of it was pretty bad, but the coming months was even worse when we saw all the different companies tied to FTX. Many people are wondering, is the same thing going to be happening with Silvergate, as in, are we going to see all these new companies start to come out over the coming months that were connected with Silvergate that could potentially be negatively affected? So we'll see the impacts of this. We already saw that, for example, Bybit halted all withdrawals and deposits from U.S. wire transfers. Many people think this has to do with Silvergate, but we'll see what continues to develop as a result of Silvergate winding down operations, liquidating all the holdings, and what happens there. Last few things with Bitcoin before we get into the surprising news with whale accounts is that recently blockchain.com also officially announced they're going to be closing down their asset management arm, which launched less than a year ago. Back in April of 2022, blockchain.com actually launched their blockchain asset management. And they said that because the market has deteriorated rapidly over the last year, and with crypto winter approaching the 1-year mark, they have decided to put a pause on operating this institutional product. So they're going to be officially shutting it down less than a year after launching it. And this is just another negative story coming out of the crypto space. So we've seen a lot of negative news, a lot of negative headlines. But the good news is something that not a lot of people have been talking about. This is in regard to Bitcoin whales. When we're looking at Bitcoin whales, there's been quite a few interesting things happening. What we've seen is that Bitcoin whales have been acting weird, to say the least. We've seen that some Bitcoin whales have started to sell off their positions, and the number of Bitcoin whale addresses with a balance of around 1,000 Bitcoin has decreased. We saw a peak of around 2,200, 2,300 Bitcoin whales with 1,000 Bitcoin in their wallet back in March of 2022. Now that number is down to around 2,000. So about 300 less wallets holding 1,000 Bitcoin this year than last year at this time. But the interesting thing is with these larger whale accounts, because when we're looking at the larger whale accounts right now, the larger whales, those holding 10,000 Bitcoin or more, have actually increased. Now there's 34% more Bitcoin whales holding 10,000 Bitcoin as of March of 2023 than there were of March of 2022. So this is showing you that these big accounts are the ones that are accumulating, adding more, and that is actually a good sign in my opinion, because when you're looking at these charts from Glassnode, you could see Bitcoin wallet addresses with less than with 1,000 or more Bitcoin have steadily decreased, but if you're looking at it with 10,000 Bitcoin, it has increased. That is a good sign to me, because that shows us these massive institutions, big accounts, big names, big money players are the ones that are doubling down on crypto, while we have seen this deterioration in market conditions, because over the last year, we've seen market conditions fall tremendously. Back a year ago at this time, Bitcoin was doing quite well. It was still well over $40,000 per coin. So it was doing quite well. And now that we're seeing the whole entire market in a completely different situation fall down tremendously, macroeconomic conditions are different as well, but still seeing that these large accounts are buying Bitcoin, that is something that you want to see as a long-term investor. So this is something that people aren't talking about. I see countless headlines regarding all these different negative news stories in terms of Bitcoin liquidations, in terms of these new tax proposals, in terms of banks shutting down and asset managers shutting down. So we see all these negative headlines, but when you're looking at the data for at least Bitcoin whales, there is still some positive news that you need to be aware of, because this is the underlying fundamentals of the market, seeing where the big money accounts are going. And right now, the big money accounts are buying more. It is proven. You can simply look at the data. So let me know your thoughts on this. Why do you think the larger Bitcoin whale accounts are buying more, but the smaller Bitcoin whale accounts are actually selling?